Hello everybody, welcome back to another video of JB&D's Market Sniffs. It's been a week since we last talked, and last episode we talked about the consumer checkpoint, FOMC, and one other thing. Um, I've done some reading since then. I've compiled some things. I'm just going to go over what I have compiled since then, and um, I still need to read a little bit, but you'll see. Let me check when's the last time we left off. We left off at the consumer checkpoint. Right there. Okay, so let's start from here. All right, this is from Bank of America Institute. Entertainment and online retail remains bright spots for lower income groups, but overall discretionary share growth is increasingly skewed towards those of higher incomes. Okay, shelter. I added this because I like how what was it? Entertainment. Entertainment is slightly doing better now. Yeah. Entertainment and online retail increase for lower income groups. The highest income group continues to increase their wallet. Okay, so online retail like that for my Etsy. Okay, hedge fund leverage rising. Lots of leverage in the market. And before we continue, let's talk about the elephant in the room of today, and that's just the market dump. Um, if you know, the market's sold off today. We're here with JB&D. We caught that move. Oh, it was a really nice move. Oh my God. I'll show you. I'll show you later. At the very end, we'll do the technicals and I'll show you what. Oh my God. What a nice, what a nice day. What a nice week. What a nice week. Here's a little video of Ray Dalio explaining why you need to pay attention to the bond markets. Um, I'm not sure if I'm allowed to play it, but a lot of it has to do with the yield curve and long-term yields and yeah. Monthly growth in spending Monthly growth in spending on OPI subscriptions has slowed down in major European markets. Option volumes in the most volatile US small cap names remains high but are normalizing. That is because finally these dumb quantum trash, other nuclear and whatever else things stocks were have finally dumped. Since October they've been dumping. Thank goodness, man. I was tired of that thing. Consensus EPS growth. I feel like we went over this graph a few videos ago, but just going over again. Looks at the Russell 2000, the outlier right here. Short interest is percentage of shares outstanding. This, however, was from like a week ago, so but I don't think it's risen that much since then. But yeah, short interest is still pretty low. Okay, at least for QQQ, which is interesting. Because it's really a tech bubble. The US 30 year, not sure if this is still valid. Haven't checked. We'll check after. AII, bear bull sentiment. As you can see, bull sentiment has gone up, bear sentiment has gone down. But this is from for last week. Okay. I highlighted the last 2 weeks. Bullish sentiment was pretty high with 44% saying they're bullish. Historical view, the 1 year bullish high being 45.9%. It's pretty close to that. And that was back in October, which was preceded by like a 3% dump in the markets. Um, yeah, so but yeah, I mean we've dumped since then, so the largest cumulative losses from before young startup companies turned a profit compared with cash burn for OpenAI. Yeah, crazy man. Equity, global leverage, long short leverage. Yeah, man. It's hot, man. It's high. The volume panic index, volume volatility panic index. My apologies. That was had a very big retracement and was um had retraced significantly, but what's the word? I forgot. Anyways, what followed that? A dump. Yeah, SPY price action, put call ratio had dumped, but again, that was from last week. We've dumped since then. Couldn't agree more with Goldman Gary on the Martin Times extremes of VIX. Prior to 2011, the VIX index never retraced 40% of spot in a 2 week period. What was once unheard of highlight the dramatic retrace has always already happened 5 times in the last 12 months, and Vega Gamma supply takes over. Yeah, I mean, it's what happens. It's been a very volatile year. Um, but yeah, you typically see a market pullback when the VIX has such a big retracement in 2 week span. Biggest China outflows shows us China is catching bids. So a few 1 or 2 videos ago, I was going over the Alibaba chart. I was going over Chinese charts, but mainly the Alibaba chart, and I pointed out that I'm finally looking to go long on some calls again after 3 months. However, I don't think the charts are ready yet. But earlier this week on Monday at open, I took some Alibaba calls finally for a few months out because I had seen this chart, this graph again, China equity flows, okay? Still seeing some outflows towards the end of the year here, and I didn't go crazy. It was a small position, starter position, because again, like I said, to me the charts aren't ready, and it has Alibaba has proceeded to dump today and yesterday even more. So I guess I was right with that. But even though I think the charts are not ready, I still took that starter position because that flow, that outflow could have resulted in a quicker reversal, and that's it. I'm getting very irritated with myself right now because I am rambling. I could have said this in 1 or 2 sentences and finished this like 30 seconds ago, but I'm still here running in circles. I am so sorry about that. I'm gonna try one more time, okay? Just for myself. Just for myself. 2 weeks ago, no, 1 or 2 videos ago, I was looking at the Alibaba chart. I pointed out the charts don't look ready to me to go long just yet. However, on Monday this week, I took some Alibaba calls after I saw this graph of the China equity fund flows. I'm seeing some outflows here at the end of the year, and sometimes flow outweighs the chart, or sometimes the chart outweighs the flow. You never really know. So I just took a small starter position, and we still dumped after I took those calls, but it's a few months out. No biggie. So I have my starting position. Now I'm just gonna wait for the chart to tell me that it's ready, and then I'll add more. Um, but yeah, that's it. Just getting some exposure apart from my stock, my common stock position. Okay, this is now 9 seconds behind. We expect the V 3.2 model will further boost Gen AI adoption in China in the next few quarters. Beneficiaries, Alibaba. Okay. Um, this shows DeepSeek's performance against ChatGPT and Claude and Gemini. Pretty close, okay, very, very close. And yeah, again, all these black graphs, black charts that you see are all from the market year by Israel Hedge. Okay, China continues to deliver top-notch AI models at a fraction of the price. So less spend, better return on investment, and cheaper. Okay, DeepSeek, input price, output price down here. Look at Claude over here. Oh, what is that? Grok. Yeah, it's Gemini. Yeah, it's crazy. Again, they spend less, they have a better return on investment, and it's cheaper. Again, we talked about this a few videos ago. Okay, Jeffries analyst Edison highlights that Chinese hyperscalers to spend 124 US dollars, 124 billion US dollars on capex in 2023 through 2025, 82% less than US peers. Yet China's top AI model trails the best US model by only 10%. Edison argues this gap shows China may achieve stronger AI return on investment even with suboptimal chips supporting inference. I just I just want you to take a second to like really think about this, okay? Just really think about this. Just really think about this. And let's continue. The long short in defense has peaked and it is at rather depressed levels. European defense. Owning Gamma is starting to look very attractive. This was last week. What has happened since? We don't. The VIX 3 months cost you. Yep. I had a lot of calls, man. I had a lot of calls. What has happened then? Oh, God. I'm sorry I didn't share this sooner. I had recorded this already, but when I looked back at the video, my camera was lagging and everything was just lagging, so I deleted it. But I'm here doing it now. Small cap median stock earnings growth is the strongest we've seen in 4 years. 4 years, look at that. Russell 2000. Tech fund flows, outflows, that was last week, and probably some more outflows after this dump. But I still don't think it's a bottom. Maybe a small dead cat next week, but yeah. Look at the XPX, and then look how it pretty much follows the 10-year inverted. Okay, like the XPX, look at how it pretty much follows the 30-year inverted. But right now, look at the divergence. New Bank of America bull and bear indicator at 7.8. Okay, extreme. So it's at high bullish level. Okay, last time it was here, February 2018, February 2020, October 2025. Um, yeah, what do we have here? The SPX and the VIX overlay. Again, the VIX is going, or yeah, the VIX is going into a volatile period. Starting at the beginning of the year. Here I wrote a little note on Code Red from Sam Altman's OpenAI headline at the beginning of the month. Once again, they're hitting the gas on the pedal on the AGI race despite initial concerns of safety and regulation. I'm not just talking about Sam Altman, I'm talking about all these tech billionaires, all these tech leaders. Um, they once warned about catastrophic AGI risk and the need for shared safety norms, but now they lobby for regulation that benefits them and compete aggressively, raising risks further. Okay? Again, there was a shift from shared safety concern to competitive escalation, and this is mentioned in the Last Invention podcast, and it was described as dangerous. This, what I know now, I learned from the Last Invention podcast. So you can search them up on your podcast platform. Gemini's app downloads are catching up to ChatGPT again. That's why they announced this code red. Gemini users spend more time chatting than rival chatbots. Look, these are the risks. Okay, we could lose human control. It could destabilize the economy. It could be weaponized. It could use deception. There could be AI oligopolies or dictatorships, but by the very few that win this race. Risks mentioned by the Last Invention podcast if safety isn't prioritized, which it isn't anymore. Okay. But yeah, so we're deploying these models faster than we can understand them. Okay. And like I just really want you to think for like just think for a second. And I'm not even like exaggerating this. There are literal interviews of these billionaires, Sam Altman, Elon Musk, all these other billionaires. There's interviews of them saying themselves, I am concerned. We are concerned. There is a very high risk of this and that, if we don't take safety and regulation seriously. They even had like an agreement. They had an agreement, not written, um, but they had this agreement that they were going to prioritize safety over speed, over winning the race. And then they're doing the exact opposite. Anyways, for your presidential election cycle, weak and sweet spots. Weak, quarter two, quarter three. Like I, like I said a few episodes ago, I think 2026 is going to be very similar to 2025. And 2025, April, what is that? That's quarter two. That's right at the beginning of quarter two, basically. Um, where we dump. So okay, that would make sense. Quarter three. Yeah, we'll see. We'll see what happens. K-shaped economy evident in consumer spending growth by income. Yep. See. This video. I recommend you watch this video on your own time. This channel by Blackline. Very, very underrated. They have very few views. I don't understand why. Some very high quality videos. Just search up Blackline on YouTube and you can find other videos. Again, I don't know if I can share it. I don't know if I'll get copyrighted. So I'm not going to. Um, but it just warns you of the risks of letting ChatGPT pay for things, or how right now it just recommends the things for you and then you have to press pay, but eventually it could just buy it for you without you having to authorize or actually press the button yourself. But yeah, anyways, again, we talked about this a few episodes ago. Episode Cash Out of Favor. This could be literally named Cash Out of Favor 2.0, but I feel like I've talked about other things in a deeper level. This is gonna be quick. Last time it was 3.8, now it's 3.3. When's the last time it was this low? Lord knows who. I don't see. I don't see. I don't see. I don't see. Look, you could talk about oh, it's not a bubble if everybody expects it. It's not a bubble if everybody knows it's a bubble. I don't care. Dude, this is like the soft and hard this is like the soft and hard data in the economy. Consumers saying, "Oh, I feel broke. Oh, things are tough. Times are challenging." But then they're still spending, right? It's like the same thing here. Investors are saying, "Oh, bubble this. Oh, bubble that. Oh, overvalued." But they're still investing. They're still going full tilt, full leverage. And I know these are fund managers, but still, dude, dude. Again, like I said last time, like arguably the best investor in the history at the moment is like cash levels at highs, and meanwhile these fund managers have cash levels at lows and all these other things. I don't even want to go back into the upcoming 2026 tech headwinds that I mentioned in that cash out of favor episode. If you really want to know, go and listen to it. Um, dude, just be cautious. Bank of America Global Fund Manager survey investor sentiment highest since July 2021. What, this was even higher than, dude. I'm telling you, dude. I'm telling you. Um, December 2024, same thing. It was a very volatile month. So it's like November, I think, December to February, and then in March we start dumping. It was the same playbook, bro. It's the same playbook. Oh my god. The number of families with children under 18 peaked in 2007. Yes, things make less sense too. It makes less sense to have kids nowadays. Okay, so here, in fact, December indicates the highest level of optimism for the economy in nearly 4.5 years, with allocations to stocks and commodities at the highest level since February 2022. Fund managers are holding just 3.3 of their assets in cash, record low. See overall liquidity in global markets as the third best they haven't seen in 17 years. See overall liquidity in global markets as the third best they haven't seen in 17 years. That might age very badly. That doesn't bode well for the stock market. S&P, for instance, peaked in January 2022 before sinking into a bear market that year. Um, Bank of America's takeaway suggests something similar. The firm recommends buying global stocks when cash is at 5% or more, but selling equities when cash holdings drop below 4%. Again, I think here is financial advice, opinion only. Touch on a financial advisor before you make any financial decisions. I'm not liable for any of your um, results of your financial decisions. Small businesses, small business profits stayed positive in November, supported by events like Small Business Saturday, which owners estimate accounts for 20% of annual sales. Da, 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 da. Profitability growth fell below zero for the first time in 18 months, signaling pressure despite signal gains. Businesses are passing on tariff and inflation related costs. Wholesale trade, especially durables like electronics and furniture, registered the steepest profitability declines. Profits remain positive for small firms, but year over year growth has turned negative, first time in 18 months. Wholesale trade profitability declined the most across small business sectors. Wholesale trade, the most affected by tariffs. For durables, the second half of the year brought negative profit. Yeah. Oh, last one. Hiring demand has, yeah, again, I never actually talked about this in the podcast, but um, people that were educating on this were saying since the start of tariffs that this would lead to a frozen hiring market, frozen job market. Uh, is that it? We caught up. Nice. Let's see. Apollo. Fed sees stagflation as biggest risk in 2026. Nice. Yeah. Don't forget about stagflation, man. It's a good thing to be worried about. It steals your eyes. Eight great instructions coming to the Fed. They prepare for the expected. These are Deutsche Bank's 2026 curveballs. Okay, 2020 pandemic meant okay. Safe to say, positive curveballs. Could AI capex and productivity gains take us back to those rates from the late 1990s? Are we still in the early days of an AI capex boom that will drive activity? And even if you think we're in a bubble, it's worth noting that during the dot-com bubble. See, I don't care because when leverage and yeah, just leverage. When there's this much leverage in the market, all this other stuff is just noise. Hey, just be careful. Just be careful because they're gonna screw over so many people. Okay? Casino always wins. Okay? They're gonna get their money. The market's gonna take that money. And you wanna be prepared so that you don't get as hurt as well. Okay? Anyways, I guess he hasn't started talking yet. Interestingly, another S&P 500 gain in 2026. What mark? Okay. Da 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 da. Tariffs being collected at now. God. Mm-mm-mm. What if it's just the most obvious bubble in history? That's what I'm thinking, but I don't know. Because everybody could be aware of the bubble, but if everybody's still invested, everybody's still going full tilt on their longs, looking for 5x, 4x, 3x, 2x ETFs, and all this other stuff, and just buying every dip. They're conditioned to buy every single dip, and who cares what they think? It's their actions that matter. God damn it. Just like the freaking soft and hard economic data. NVIDIA earnings progression over the last 3 years has been phenomenal. What if they flatten? Okay, what if the market? What is? I know that's the whole point of this article. Yes, I know small businesses are obviously getting more affected by these tariffs. Come on, man. Again, remember that one risk um, of prioritizing speed over safety. It can destabilize the economy. Okay, surely this can't go on forever. And finally, but that would be an extreme. And finally, what if we get another huge tariff? Solar flare, mega volcano. Yeah, you never know. That's always possible. Or just something like if everybody's aware of the AI bubble, if everybody knows that there's an AI bubble or thinks there's an AI bubble, whatever. Um, and a lot of people, how to explain this? Let me word that differently. If everybody is discussing about a possible AI bubble, whether they think it is or is not, there could be another event unrelated to all of that that just dumps everything, okay? And it's not, I wouldn't say it would be so unexpected when, again, we have all that leverage in the market. Anyways, so top gold trader. If AI fails to live around his fast food, there'll be a devastating depression. This is taking longer than I wanted, but Trump hasn't spoken. Sentiment check, another tricky week. This was before this week's done. Every single stock in the NDX has been 2 times more volatile than the index itself. App, software, and IT services. Mega cap stall out what gives. The week ahead. Wednesday, Thursday, USC. Thursday's tomorrow? Oh my God, that is tomorrow. We have US CPI plus initial jobless claims before market open. Okay. That's gonna be another catalyst. Okay. If yeah, okay. Implication. Why not do tension? As a crisis climax in late 1992, the central bank hiked overnight interest rates 200. Huh. Uh, yeah, man. Hedge fund position in North American semis got back to peak levels just in time for the biggest SOX puke in a very long time. Pain is huge. Ah, my God. Why didn't I see this earlier? God dang it. If I had seen this, man, maybe it's just a hindsight in me talking, but I feel like if I would have seen this, I would have taken some SOX puts. I haven't even looked at the index today. Let's see. SOX. My goodness. Oh, that's ugly. 15 was Monday. Shoot. Let me scroll back up. God damn it. So Wednesday, Tuesday, Monday. Look at this double top. Look at this double top. Look at this double top. Just look at this double top. I literally tweeted about this, not on SOX, but on the NASDAQ and pretty much the market in general. Whichever chart has it set up. Dude, it's crazy, dude. And nobody's talking about it, bro, or they just choose to ignore it. Are we just ignoring this double top and plus hanging man setup on QQQ? When was that? 5 days ago. So Friday. Okay. Are you seeing this? This is the QQQ. So it's pretty much a double top. Sure, this is higher than that. Uh, Pretty much a double top. Not perfect. Has the M setup. Okay, the M setup. Okay, the M setup. And then the hanging man. We talked about this in a few videos ago. Okay. You don't know what a hanging man is? Let me show you again. Hanging man candle. And then go look at it on your own chart. Okay. Boom. Monthly candle. Double top. Okay. You see? Boom. 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 Are you seeing this? Are you seeing this? Look at SOX. Look at SOX. Look. Oh my God. Oh my God. That's ugly. That is very, 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 very ugly. We'll probably get some balance too. I don't know though. What about that monthly candle? Probably looked like a hanging man as well. Yep, it was a hanging man. Man, I love the hanging man. It has such a good success rate. Probably my favorite bearish candle setup if I had to choose. Anyways, whoa, a notification just went off. Oil just dumped. Supposedly, supposedly. I wonder if Trump is talking. Give me 1 second. Let's put this. Put the 5 minute. Oh my God, look at that. Oh, what's going on here? Okay, Nasdaq pump, oil's dumping. So it might not be dumping for the reason I would think. Maybe it's dumping. Maybe Trump said he's not going to invade Venezuela, or maybe this, or maybe he hasn't even spoken yet. I'm not quite sure. But anyways, um, Japan rates and the AI connection. Notably, NVIDIA topped almost perfectly as the Japanese 10-year kicked off its latest explosive move. Interesting. Will Big Brother follow small tech going to the lead, big tech even lower? Man, I hope so. It better. The hell? These trash small tech stocks? Come on, man. Not pretty. Is Bitcoin about to seriously take out the big? I mean, like, come on, bro. Everything big tech speculation? Dude, small tech even worse, dude. Is Bitcoin about to seriously take out the big trend line? Don't care about Bitcoin. Same, same. Are we seeing psychology? He is speaking. Trump is speaking, and I'm missing it. Oh. Are we seeing psychology on steroids being washed out? All these ex-hot assets have moved in close hand. Gold, just getting started. Don't care about gold. Eating cycle is over. Think so? I don't know. Watch it closely. Okay, well, they say Trump is talking. It's fine. Look, I'm able to look at my futures contracts here on the side, so we'll keep it moving. We'll keep going. Let's finish these last two articles. While short interest in aggregate is somewhat low, therefore the average stock median remains very high. Short interest in the Russell 3000. Okay, let's add that here. Again, I like to compile everything that I see interesting. Um, the shorty gap, the median short interest. The median short interest is aligned with very low earnings growth, even as median company earnings growth rose in double digits. Cash is trash. Cash is trash again. Same chart that we showed earlier. hungry for risk. Risk appetite at elevated levels. Why the hell is everybody so hungry for risk? Everybody swears as in, I mean, I'm saying there is an AI bubble. Um, e- everybody's aware of this bubble. Everybody's aware of this bubble, and everybody still wants to take risk. Why is risk appetite so high? It doesn't make sense. Again, pay attention to what they do, not what they think, not what they feel. Okay, just like the hard and soft economic data. Anyways, big bid goes dormant. We're entering okay. Sell or sell. Short gamma increases on downloads and dealers turn long gamma should we move higher. Hedging flows are basically to sell or sell. Um, copy image, copy image, copy image, copy image, copy image. Um, wait. Okay, so yes, short gamma increases on downloads and dealers turn long gamma should we move higher. Hedging flows are basically to sell or sell. Yeah, so a couple months ago, I was keeping a big eye on this again. When we're moving so high, so fast, and with so many people going in and um doing all this, uh, dealers were basically pushing stocks higher with their hedging. And now that once we reverse course, uh they have to reverse course as well, and it just the selling is so fast. We saw that happen last month in November after October OPEX. There were so many calls that expired, and ever since then we've just been so choppy and volatile. Semis versus software. Okay, soggy. China Tech is breaking below the longer term trend line and trading well below the 200-day. Not a huge bear, but definitely lack of bullish momentum despite being cheap from valuation point of view. How you going to pay? Interest rate expenses were at records high even before the latest move higher in rates. Good luck. Yes. Pay off your stuff. To the moon. Elon seems to be the only one too. Starlink and da. Okay. I am um let's see. Baba continues that slow mo implosion, but no, the bigger chunk exactly. Exactly. It's still not quite ready yet. But just give it a little bit more time. 10 cent looks interesting. China's NVIDIA losing momentum. Not so the AI connection. Okay, last one, and then I gotta go listen to the Orange Man. SOX from sexy to soggy. Yeah, man, look at that double top. Oh, so ugly. So ugly, dude. Dude. You know what chart that reminds me of as well? It reminds me of the Taiwan semi stock. Look at this. Look at this. Oh, so ugly, dude. So ugly. Ah. Oh, you know another stock that I like to short right now? Costco. Oh my God, dude. Costco, dude. Costco lost. Costco lost its trend lines. It's just on a free fall, and look, no support. It lost. Look at the monthly. It lost. You know what else that reminds me of? That reminds me of Nvidia. Look, Nvidia. It reminds me of Nvidia weekly. I shorted Nvidia this week because just look at this weekly candle. Oh, sorry, guys. Sorry. So if you look here, this was last week's candle. This didn't look like that before today. But before today, it was pretty much flat, okay? You can see it's curling under the EMA. So I was like, you know what? I'm just gonna short this. And then guess what happened today? Boom, down. Probably goes lower. I think it still has room to 169. But I took my profit. Oh, okay. Justin Tom, hedge fund positioning, North American settings. Okay, we talked about that already. Yeah, not looking good. People say Head and Shoulders, but again, I saw more of a double top on my chart. On this one, that high looks slower, But if you don't want to say double top, if you don't want to say head and shoulders, you could also say Adam and Eve. And if you don't want to say that, whatever, look, it's still not looking good. It's looking range bound. Oh, look at that. I spelled pattern wrong. Something like this. Okay, you see that? Anyways, um, yeah. So that's that. Uh, something else about this chart. Oh, the S&P 500 chart. Yeah, the S&P 500 chart. It's just range bound. It looks like it wants to go back to the lower end of its range. And by that, I mean pay attention to these new channels I'm drawing out, okay? Only those. You see this big range right here? Here. I'll make them thick and I'll make them white. Just look at the white trend lines, the white horizontal trend lines, okay? So it looks like it just wants to eventually retest the lower range and stop, okay? Um, but that could take another month or 2 weeks. Anyways, no panic selling. The move lower is just, hey, it's just sell risk, no hedges needed. Note how relatively well behaved volatilities are trading. Last time index was here, the VIX was much higher. Volatility isn't cheap. Okay, I like that. Wow, that's very interesting. So there isn't panic just yet. There isn't panic just yet. Did I tell you why I took that NQ short? Um, right now earlier, it was because I feel like today today's speech might be like Liberation Day. The reason I'm saying that though, let me explain. Back in Liberation Day, everybody was not expecting such high tariffs. Everybody was expecting much lower tariffs. What happened? He went full banana out and he said, you know what? F that. We're going full throttle on these tariffs. Boom. Market dumps. Everybody's shocked. What the hell? Why do I think this might be similar? I might be wrong, but it might age well, it might age bad. I'm saying this because he's giving a speech again, and so he's giving a speech, and there's a rumor that he might announce something official, having to do with Venezuela. On every post that I see talking about that rumor, supposedly there was members of Congress that leaked this rumor that he's going to announce war with Venezuela. You go in the comment section and you see people saying, I want to bet on nothing ever happens. Nothing ever happens. Nothing ever. Everybody just say nothing ever happens. So again, people are not expecting something, which is making me think we might actually get something. That's why I'm short, but again, not a lot because again, it's just speculation. And I already cut a nice move this week on the short, so I don't need to mess it all up on this speculation. But if it dumps, then I get a nice move. But man, I hate this guy. When you put it in this way, VIX looks like a bargain. Oh yeah, VIX is suppressed right now. That's really interesting. I think this gives us a lot of room to go lower. Um, Huge. Nvidia's 170 is simply huge. It break below. Yeah, but it's not gonna be easy. Look how choppy it is. At least I don't think it's gonna be easy. It's very choppy. I don't care about Oracle. I don't care about Bitcoin. Also, just in time. Investors saying they are overweight the tech sector. Oh, they're going back in. They're going back in. Could be higher though. It's all right. It's not. Systematics decided loading up on stocks just in time for the latest puke. They will show the latest UTA projections via GS downside. All right, chat. That's it. Some various articles I need to read, but we'll keep it at that. I'll see you guys for the next video. Okay, like, subscribe, follow, give a review. Um, yeah. Thank you for watching.